All right. Bitcoin. What's Bitcoin doing today? Well, we had a daily close yesterday, and this is not a good close for Bitcoin. Not at all. For many reasons, it's not a good close. Firstly, yesterday's candle engulfed the previous candle. This green candle at the top of the range, and this is an engulfing candle that's just basically overshadowing and it breaking down. And we had a close underneath this. Oh, let me change that to yellow. Underneath this wick here. Yeah, you see that? This wick here. So often what happens with the price is that the candles will come back to correct, and they're looking for, and it's looking for support. And when there's a correction, when you look at the higher time frame, the daily to begin with, you'll see that it will either come back to one of these previous highs, these candle highs, either this one, this one, this one, this one, or this one. Yeah, it will try and come back to find liquidity where it finds natural support. So you'll get that kind of reversal. Then the next candle, you'll get some kind of lower volume price action, maybe with a doji or a smaller red candle. And the price just slows down. It starts to rest on support, and you can see at the top of these candles where the support is forming. Yesterday's close was so violent that it's actually closed underneath every single one of these levels that I had in mind, literally every single one, right? And that's basically signifying people holding. Yeah, so they're selling and they're holding their positions. Yeah, or they're not valuing enough the price at these higher levels enough to hold. Yeah, so it's too expensive. Effectively, the market is saying Bitcoin is too expensive at these higher levels, and we don't want to continue holding the Bitcoin at these prices. We're looking for lower. That's what the market is saying. That's what this is saying. Okay, but you can't. This doesn't mean anything on its own. This is what you have to understand. Yeah, this could be just like any one of these previous red expansion candles, like this one here. See this one? This one. And the next couple of candles, few candles, is going to really decide how this the price behaves, and then you can begin to decide what to do and how to proceed. But I think what I was saying yesterday is pertinent in the sense that we are in a higher range. That range hasn't broken yet. So if I mark that out, this is the weekly time frame. We are basically, if you look at this big weak expansion candle, this green candle, we are basically in the range of this candle and the body of this candle. Lines are all black. That's because of David. Alright, never mind. This is our range right now. So what I'll often do is I'll call it weekly body high. And you can, these aren't volume ranges, these are candle ranges. There's a difference. Yeah, so I'll often do volume ranges too, but this is just based on candle formation and candle patterns and structure. So we're in this range of this candle, and now the price, this is holding the price on the weekly time frame. And then when you zoom in, like if you go into the 3-day chart, you can see how the 3-day chart behaves around these levels that I've marked. See this? And you can see that there is, the price does move around these two lines. Look, on the 3-day chart, it closed over, it closed under, couldn't get over, and then it pierced through. But actually, you can very clearly see, and at the bottom part, you can see how the price has almost got to it, but hasn't managed. Okay, that's actually this. I think it's a lot more bullish than you think. Yeah, like people are now looking at the price and thinking, oh my God, we're going down to 0. Okay, or maybe they're hoping that we're going to get down to 15 or 20, maybe. But until we break this range, we're not going to go anywhere. And that's the reality of how this works. Yeah. So before you start thinking about these lower ranges, you know, there's a lot of lower ranges to look at in the future if the price gets down to those lower ranges. But at the moment, we're still in the highest range of this rally. Yeah. And this correction can last a few weeks or potentially a few months. There's no reason why the price should go down. It could just go sideways. And as long as we don't get a weekly close outside of these two lines, yeah, we're going nowhere. That's basically what I'm saying. Yeah. That's basically what I'm saying. These lines are holding the price, and this yesterday's candle was very also gave us some newer information, because you can do exactly the same thing with this, but you can call it the 3-day range. So this yesterday's doji gave us a new 3-day range, so you can call it the 3-day wick high. I'm gonna call that. I mean, this is basically the same as the week low, so I'll delete it. But just for the sake of this, what I'm describing, I'll just add it. And so if we get a 3-day candle close underneath that line at the bottom or that line at the top, that's also signifying a break of range. Yeah. So now this green doji that was formed last night, is the new range, or it's holding the range. These candles are holding the range. So it's not. So as far as I'm concerned, the price can quite easily do this now, and it's not going up or down. And it doesn't mean anything. It just means that we're still in the range, and that's really what's happening. Yeah. So even though yesterday's move was, relatively speaking, when you look at the volume, it was quite violent. It did nothing more than just confirm that we're in a range. Really, that's really all it did. If there was more volume and the price hadn't been bought back, and the reason why it was bought back was because a lot of people shorted and they took profit, and then obviously you had a few swing failures here, 1, 2, and then some people went long as well, just based on those swing failures. All it really did was say we're still in the range. It didn't close lower. It didn't even pierce lower than this weekly body range line that I have, or this lowest wick here. So as far as I'm concerned, on the daily time frame, we haven't made a lower low. We haven't. It looks like we're forming some kind of topping pattern, but we haven't actually done that yet. What's more, and this is also quite important to see, is that this daily close has formed a poor high. That's a poor high. You see this where it squares off? So you have a close in the highs, and then as it opens, the price drops. There's no selling tail above this previous high. It's a close above, and then a price closes underneath, and that's basically a poor high as far as I'm concerned. So what usually will happen, and this is what I'm expecting in the future, I don't know exactly when, but you have a nice liquidity level here and the price is going to go back up to test that level. I'm expecting that in the future. I don't know when it's going to happen. I don't know if the price has to go up, down, up, and then test, or if the price is now just going to go up and test. I have no idea. But what I am expecting is for this area of liquidity to be tested, this order block. And so as you can see here, it formed that square pattern and the price dropped a couple of candles down. Then the price went right back up to test. That was squared off as well. So that was a poor high. The price went right back up into that area again. Yeah, because it's testing. The price always goes back to test these levels. And so we've created that kind of formation in the highs here. And so I wouldn't be surprised if the price goes back up to test. And basically if people are, now this, when the price goes to test, it's basically trying to determine how much interest there is in continuation of the move. And the move now, based on this candle, is selling. And so the price will go up to say, well, how much strength, how much liquidity is in this sell? And now if people really want to sell, obviously they're not going to market sell, at the lows. What they'll start to do is they'll start to place their orders on this green candle here, starting at the bottom, going all the way up to the top wick. So this candle here has now got most of the sell orders positioned on the candle. And the price will slowly try and work its way up, however it gets there, until it starts to reach these limit orders, these limit sell orders. And depending on how far this candle, this price can get into that sell block, will determine how powerful or how weak the downward move in this red candle is. Because if the price goes all the way up to the top and clears all that liquidity, it means there aren't many people selling. But if the price can't even pierce that order block and it just sells right from the bottom of it, then you know that there's a shit ton loads of orders up there, and it can only barely get into it can barely break into that order block, into that candle. And it tells you something. And that's why if it does that, you'll be a lot more. You'll have a lot more confidence to short than if it goes all the way in and clears all the liquidity. Actually, I'll probably be looking to long to go back up, because I'll know that it's been cleared. It's gone all the way and it's cleared all that liquidity quite easily. So that's going to tell us something. So when the price goes back up there, we'll have a better idea of how much liquidity there is to sell, to continue this sell. If people are still seeing this as a hold, or if they're saying, well, no, let's just sell now and look for lower. This is that. When the price gets back up there, we'll know. But this red bearish candle from yesterday doesn't give us that information, because we didn't close lower than these lows, any of these lows. The price didn't close lower than any of these lows. That tells you something. Here, 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 here. The price didn't close lower than any of these lows. It closed lower than these highs, right? So we know the price is too much, but we know that the lows held in that sense. So we are in a very tight range at the moment. That's what I'm seeing. We're in a very tight range. And as you kind of zoom in, you just have to, I think it's really important to be patient. Right now with Bitcoin. If you're looking to trade Bitcoin, I think it's a really good idea to be patient and just to wait. And what you'll usually see after some kind of push down like this is the price to slowly come back up. And part of the reason why the price does that is because you've created a lot of volume gaps, and the price tries to fill those volume gaps in these candles that are formed going down. If I change them to bars and draw a volume profile on these three candles, yeah, I mean there aren't any gaps really, but you see the volume profile, there's not much volume, so there's a little bit of gap there actually. You can barely see it between these two areas. Oh yeah, here there's a gap as well. Yeah, so there's a little bit of a gap up here. There was a gap here, but that was, you see, the price came back to fill the gap. And based on what I'm seeing now, I can already tell you that there is a trade to be had, because you have a gap into this weekly body high level, and I do expect that the price will go up, fill the gap, come back down, take this SFP trade. That's already a trade on the table for me, just by looking at this this volume profile of this move down because of the gap that's formed on the way down. So let me go and break that down a little bit more. How would you do this? Well, let's just see if there's any more confluence to be had. I'll do volume pool. Yeah, you see that comes into the golden pocket as well. So that's quite a good trade to be had. This is an intraday trade, but it does allow people to get into a short if they're looking to short. What you can do is trade that gap and that SFP and just target the lows. But the reality is, I don't think, because I think what we're forming now is some sort of kind of flag, some kind of flag. I think we're forming, it looks like we're forming some kind of flag. Yeah, that's what it looks like. And so what you're going to get is the price is going to creep up, probably go up to fill the gap, take out that liquidity, then you can short because you have an invalidation as you come underneath the golden pocket, and then coming into these lows here, you would have to take profit. So you're not looking to hold this short. You are looking to just, it's like an intraday trade, trading this small range, and you'll take most of your profit. It's like a scalp, and then you have a little bit left, and who knows, like the price could continue going up, bounce down, and or it could just continue, it could just come up again, and you could enter another short if it goes back into the golden pocket here and rejects. You still have your invalidation. You could compound that profit that you've taken, and you can trade it and try and get it right back down to this lower level, and that would be all the way down there. So you could potentially compound it, something like that, back into the golden pocket. So you're taking the SFP, and then this you'll be trying to target the lower wick. This lower wick, that would be your take profit. And if it continues and if it holds, then you could aim for the bottom, for the big take profit. That could be your target. Or you get an SFP of this lower wick, and then you could take the SFP tray and try and trade it right back up, and that's probably more probable. That's more likely. This long is more likely. That could just be a few intraday trades that you take today on Bitcoin, just on the price action that I'm looking at. You don't expect the price to drop until before it goes up. So, and then you're not going to take the short now. You're going to wait for it to come, fill this gap. Usually with gaps, I'll put like some, I have this kind of indicator, this level, this, I mark it out. I call it a gap back test, somewhere there. And I'll send that to David because it'll save him watching the video because he's babysitting. That's kind of what I've got laid out for Bitcoin today. I don't really see anything else. I think we're ranging, and then I was going over the create, I'll call it trades, hide those. I was looking at this channel yesterday on the higher time frame, and I think if you want to, I think draw it out, because I think it's quite a good channel. Now, the midpoint isn't respected as much as I would normally want, but the edges are. So really for this channel, I'm focusing more on the edges than the midpoint. You are getting some kind of respect, but usually on the midpoint, it's when you lose it and then you back test it, rather than on the first instance when we go back into it to hit it. It depends. The midpoint is very kind of variable. Usually with these channels, the midpoints are quite good. But yeah, I mean, I think the edges are quite nice, and I would be interested in lower prices when we lose this bottom of this channel, because if we were to lose the bottom of the channel, we're also losing potentially some key horizontal levels as well, you know. And I think that's quite weak if we can do that. And at the same time, at the highs, well, actually the highs are slightly different, because we could range, whatever. Let me make it more realistic. Range, whatever. And go on SFP this high. Again, you know, and we could just be forming this, it's going to be really painful for the shorts if we keep on taking liquidity. And I think effectively what could happen is we just this continues until it gets to higher prices. Phone call. Sorry about that. Yeah, so this could just continue ranging until we get to higher prices, and I think people don't realize that this is a possibility. You know, like, look at this. You know, we are in this channel. It's very clear that we're in a channel. Look, this channel existed back here in July 22. We almost got into it here in April 23, and now we're in it, and we're just trading in this channel. It's just what's happening now, yeah? And I think you want to, like, you want to lose it. If you go back here and see, and this is the 12-hour frame, look at this. When you lost the channel, you lose the channel, then you're looking for lower prices. And here, look, we lost the channel. We actually, this is almost like a bull trap. And we lost it the second time we closed. Reversed that, look at that. And then it came to back test. Look how it back tested this channel, the bottom of this channel, 1, 2, 3, 4 times almost. So I think this, for some reason, I can tell you that this channel is quite important. So let's just see what happens. In the meantime, I think the opportunities are going to lie probably with the altcoins. Because as Bitcoin doesn't move or goes sideways or doesn't do anything, I think there's going to be a lot of opportunities with altcoins. Altcoins are going to start pumping again, and I think that's going to have it's going to be, I think the key indicator is going to be ETH BTC. And so right now ETH BTC hasn't yet done what it needs to do. And we're just waiting for ETH BTC to do what it needs to do, which it hasn't done yet. And effectively, what ETH BTC needs to do, in the short term, we need to get like a daily close back into the value area low, back above the point of control, back above these kind of areas. And in the slightly medium to longer term, what we need is the price to make its way back above the value area high, hold it as support for continuation to go up. Yeah. If we get that, then you're going to see a lot of liquidity flow into the alts. Yeah. And so you can always keep an eye on this to see what this is doing. But I think in the short term, if you suddenly see on ETH BTC that we're closing back in this value area that I've drawn, this volume area, we're closing back into the value area. So we've lost it. So yesterday when we closed outside of it, just like we have done before, here and here. And I think what you can do is kind of go to like the 4-hour time frame. And as soon as you kind of get a 4-hour close inside of it, you can basically change your bias, you know, for alts basically. And then if you want to zoom in, you're basically looking for 2 30-minute closes inside the value area consecutively. That's basically what you're looking for. So when I pull this value area on the 30-minute time frame, you can see where it is. If we can get like a couple of 30-minute closes back in there, then I think that would be a really good indication that altcoins are doing well or about to do well. And you can start pivoting towards looking at altcoins, and then altcoins are, you know, it's a whole different game, and you know, you have to play that differently. I was saying yesterday and the day before that Binance